On the oil and gas sector, we have, the Lok Sabha, which yesterday passed the Oilfield Amendment Bill of 2024, which intends to reform the legal framework to meet the current needs and market conditions and to make the sector a lot more attractive to investors itself. To discuss this in further detail, now we are joined by Probal Sen, who is the energy analyst at ICICI Securities. Thanks a lot, Probal, for joining in. Just wanted to understand, what role do you think private players like, say, from the listed end of things, Reliance or public players like ONGC, Oil India, play in this? How do they stand to benefit from the amendments that have been made, or the key highlights that there are in this oil field amendment bill?
So I think there's three aspects, which are probably of interest. Number one is that the definition of mineral oils has been expanded to include all categories of petroleum-related hydrocarbons, including shale and CBM and everything else in between. So I think it's probably a more comprehensive definition that will allow that all categories, whichever categories of hydrocarbons are there, the rights for exploration as well as development of all kinds of hydrocarbons will now be covered under one legislation instead of multiple legislations earlier. So that obviously improves the speed and efficiency of regulatory clearances. Secondly, I think the fact that petroleum lease has been now clearly identified rather as separate from mining lease, and there has been clarity provided on the terms of the lease being consistent across the period of the lease. I think that will probably go a long way in removing the uncertainty that used to be there earlier in terms of changes to maybe profit sharing or pricing regulation for the end product, and so on and so forth. Thirdly, the dispute redressal mechanism has been clarified, and there has been a clear chain of command established in terms of how to escalate and how to resolve disputes. Plus, the element of criminality has been removed from the penalties for any violation of the lease conditions, being replaced by financial penalties. Now, so all of these, I think, will probably encourage private participation a lot more. And even for state-owned PSUs, I think it will probably make it easier for them to go out and encourage collaboration with global majors or even larger private players. So I think the speed and the extent of exploration and development activities is likely to actually go up as a result of this legislation. Plus, with greater central control and the sort of opening up of certain no-go areas as well for exploration activities, I think the speed of sort of regulatory clearances should ideally pick up as a result of this act. Obviously, we'll have to see how it goes, but broadly speaking, I think those are the key points.
On the exploration of no-go areas itself, I just had a follow-up. Does that imply higher output? Because I was reading through the press release, and it says that nearly 3/4 of the current explorable area has been awarded in just the last 10 years. Has that led to higher output, or there is still some gap? Because while this on paper sounds good, what we need to understand is the on-ground impact.
No, I think you have to understand that there is a large gestation period in terms of the exploration process. Most of the exploration basins in India are fairly mature ones. So what that really implies is that the depth at which you're likely to find oil and gas reserves is probably higher, and you're likely to have much more difficult to access resources or reservoirs. So what that obviously means is that you obviously need to have a large exploration program. If you look at the KG Basin asset, for example, the reservoirs are probably a few thousand meters below sea level. So those kinds of deep water offshore assets, even if exploration is opened up, it will take a little bit of time for the results to show through. The difference obviously is that over the last decade, there has been a gradual access that has been provided to earlier, inaccessible areas, but it will still probably, over the next decade is when we're likely to see, positive results of that and production actually starting to flow through. I mean, a deep water offshore asset typically can take anywhere from 5 to 7 years from the discovery of hydrocarbons to basically get through to production. So I think we have to probably wait and watch in terms of how this plays out.
Okay, all right. Hi, Probal. Always good to hear your thoughts. Let's focus on the space that you're tracking then. Crude oil prices have corrected. That's normally a positive for OMCs. However, for the oil producers, Oil India, ONGC, the play is on volumes moving up from here on. So give and take everything from the oil and gas space. What is your top picks?
I think, given the way that the stocks have behaved, we have a largely positive stance across the space. I would probably continue to be constructive on the city gas distribution space in particular. I still like MGL. I still like GAIL to that extent. I think Oil India probably is very attractive at these levels. HPCL among the OMCs would probably be a standout. So those will probably be the four top picks. But in terms of recommendations, we are largely positive on the space with probably a slightly negative stance on Petronet LNG and a cautious hold stance on Reliance at this point of time.
All right. Thank you so much, Probal, for joining in with your insights and topics as well. Always a pleasure speaking with you. With that, we wish you and your team a very happy Holi. Take a short break, come back, focus on the markets and a lot of stock-specific action. Stay with us.